One of the things I've been thinking a lot about is why is Bitcoin not going up when all of the precious metals are going up? It seems like those two assets were very tied together. There's a lot of correlation between them. And the fact that Bitcoin's not going up has got me thinking a lot about what's going on with Bitcoin. What are the market forces? What are all of the macro factors that are playing into this? I think that Bitcoin may be even more interesting, sitting at $87,000 than it was at $126,000. If you love Bitcoin at 125K, you should love it at 87. But that's not how humans usually think. They tend to look at assets and say, well, this one's going up, so let me go buy it. And then when assets are going down, they usually are like, well, I don't like that. It's not working. But as we know, maybe the great Charlie Munger quote, the big money's not made in the buying and the selling. It's made in the waiting. And I think that's what Bitcoiners are realizing, is that if you continue to dollar cost average into Bitcoin or any great asset, you hold it for a long time and just let the asset do what it was intended to do. It usually will turn out just fine.
Markets are behaving in ways that feel almost otherworldly right now, and anyone holding Bitcoin might want to take a closer look. The traditional heavyweights of value are erupting with gains that look almost unreal, while Bitcoin drifts in the opposite direction. Gold has blasted upward by 80% over the past year. Silver has gone vertical with a 250% surge. Copper is up 40%, and platinum has nearly doubled twice over with a staggering 200% jump. These aren't mild fluctuations. They're colossal waves, signals that something deep within the global financial system is shifting, redirecting how wealth moves and what investors are suddenly treating as safe, scarce, or essential. But here is the problem. Bitcoin, the asset that was supposed to lead this kind of rally, is down 16% over the same period. That is not a small gap. That is a complete reversal of what most people expected. For years, Bitcoin and precious metals moved together. They were both seen as hedges against inflation, against instability, against a system that prints too much money. But now that relationship has broken, and nobody seems to have a clear answer as to why. Anthony Pompliano says the answer lies in understanding what is actually driving metals higher before we can make sense of Bitcoin's struggle. He points to a fundamental shift in how capital moves, what investors fear, and what they believe will protect them in uncertain times. According to him, this is not just about Bitcoin underperforming. This is about multiple forces reshaping the entire market, and Bitcoin is caught in the middle of all of them. Let's hear directly from Anthony Pompliano for more insights. Please don't forget to like, subscribe, and enable notifications. Thanks for tuning in. Enjoy the rest of the video.
One of the things I've been thinking a lot about is why is Bitcoin not going up when all of the precious metals are going up? It seems like those two assets were very tied together. There's a lot of correlation between them. And the fact that Bitcoin's not going up has got me thinking a lot about what's going on with Bitcoin. What are the market forces? What are all of the macro factors that are playing into this? First, let's go take a look at the actual metals themselves. We have gold, which is up 80% in the last year. Silver's up 250%. Copper's up 40%. And platinum's up nearly 200% over the last 12 months. At the same exact time, Bitcoin is down 16% over the last year. So not only are the metals up, they're up significantly, every single one of them. But Bitcoin is down double digits. And that obviously has people not feeling great. And so we've got to understand what is driving all of the price appreciation in the metals before we can think about Bitcoin. In terms of gold, I think that gold is a safe haven asset. And we know that central banks are buying more and more gold hand over fist for their reserves. That makes sense because not only are people dropping dollars and US treasuries, but actually what we're seeing is a de-fiatization of the global economy. It means that people are saying, look, I'm not going to sell dollars and I'm going to go and buy, yen or won or pesos or anything else. Instead, what they're saying is I'm going to sell dollars. So I'm going to buy gold. And so naturally, gold, it's not a completely finite asset, but it's a scarce asset. And so if you have a significant increase in demand for a scarce asset, then gold's going to go up. But the thing that's interesting is it's not just gold. Silver, which I think a lot of people say, well, silver's kind of the little brother of gold. But silver's demand is not only coming from people who want some sort of store value. Obviously, yes, some people buy it because they think that it is a scarce asset as well and it will appreciate. But I actually think that the bigger story for silver is the fact that it's an industrial metal. You need silver to do a lot of different things. If you start to look at what is going on with silver, well, you start to say how many different pieces of defense equipment or AI hardware, or maybe even things like self-driving cars. There is significant demand for silver because the world is building things again. We are starting to produce stuff both in the United States and internationally. We're saying that we want to re-industrialize the world. And if we're going to do that, we need to have the raw materials to be able to go ahead and conduct that work. And silver's a big winner there. Now, some of the demand for silver is coming from the store of value, and some of it is coming from the actual utility case, but I think that is a huge driver. And then obviously, if we go and we look at copper and we look at platinum, copper is really interesting because there's a lot of stuff there. You have all of the electric vehicles, you've got all of the electrical infrastructure, you've got renewable energy. All of those things need copper. And so there is significant industrial demand for copper. I don't think people are buying copper because they think it's a store of value. I think it's all industrial demand. And then platinum, very similar thing. Now, the thing that's interesting about platinum, and the reason why it's up 200% in the last year, is that there is very, very low supply. And so you have a market structure that is in favor of platinum holders, and then you've got that increasing demand. It's a lot about what used to be the driving story behind Bitcoin is that there was this finite supply, huge demand, and that led to a big price appreciation. And so when you're looking at gold, silver, copper, and platinum, these things are all being driven by different inputs. There is demand that is increasing. You have low supply in some cases. In other cases, you just have so much demand that it is overwhelming the current supply, and that is driving the price higher. Now, what I find most interesting about this is there has been this rotation. Will Clemente pointed this out, and I thought he was really on track with this idea that gold kind of ran first, and then people started to push into silver and now copper and platinum. And so you've had this kind of rotation through the metals. I like to call it the metals mania because this thing is not stopping and doesn't seem like it's going to stop anytime soon. We're not going to stop building EVs. We're not going to stop putting in electrical infrastructure. We're not going to stop with renewables. We are going to continue to build all this stuff. And so the industrial demand for silver, copper, and platinum is going to continue, and that will likely lead to higher and higher prices over time. Now, that brings us to Bitcoin. Remember, the metals are all up, and they're up substantially, 40% to 250% over the last year. Bitcoin is down 16% at the same time. And so I think that there's a couple of pieces here that are worth paying attention to. First, you have the adoption by Wall Street. And I think that, Jordi Visser has pointed out this IPO moment of Bitcoin. You have people who had been holding Bitcoin for 10 plus years. They started to sell their Bitcoin or to hand it off to the Wall Street folks. A big reason why they might have held Bitcoin is because it was outside the system. It was antithetical to everything that Wall Street stood for. It had this aspect of being something that resisted demand or resisted the system. And so now that it's being brought into the system, those people may be not as excited. They may think that there's not as much upside to it. Obviously, Peter Thiel and many others have publicly said that they think that Bitcoin's future prospects may not be as asymmetric as the past. I don't think that's a crazy idea. But the question is, how much will it continue to appreciate? And really, I think that a lot of those OGs, they're the ones who are saying, hey, look, I'm not as excited about the future as I was maybe 10 years ago. And so that handoff to Wall Street, I think, has been one big driver. The second thing about the Wall Street adoption is that there are all kinds of financial instruments that people now have access to. It used to be really hard to short Bitcoin. Well, now you can do it very simply. And so the fact that you're able to do everything from option selling to shorting, et cetera, I think that is having a different impact on the price. Doesn't mean it's all net negative, right? You can obviously use options to amplify your exposure to Bitcoin as well. But I do think that it has a change in the market structure. It has a change in the way that people think about Bitcoin's price action. And you just start to temper all of the volatility. And we've seen that. Bitcoin used to be an 80 vol asset. Now it's more like a 40 vol asset. And so by bringing in that volatility impact is both on the upside and downside. You shouldn't expect Bitcoin to be as parabolic, but you also shouldn't expect it to have the massive 80, 90% drawdowns that we saw in the past either. So I think that's one component of what's affecting Bitcoin is there's been a significant change to the market structure and these adoption by Wall Street. Now, the second thing that I think is really important is I think that a lot of people looked at Bitcoin as a chaos hedge. And they thought that the more that there was instability, both domestically and internationally, something like Bitcoin would be a great solution. And so when there was wars that were breaking out, we had, Israel and Hamas, we had Russia, Ukraine, we had the constant threat from Iran and China. All of those things were driving instability. When you have instability, people wanted to go and buy an insurance policy against the instability, and Bitcoin was the chosen asset in that case. Now, what's interesting to me is the central banks, their chosen asset is gold. Central banks have a lot of money and they're helping to drive the price of gold. But it seems like there is not as much of a bid for Bitcoin coming as this kind of insurance hedge. And I don't think it's because Bitcoin now doesn't serve as the insurance hedge. I just think that there's a lot more people in the world who see stability rather than instability. They are looking and they are saying, wait, their wars are either winding down or being ended. They see dictators like Maduro, et cetera, being taken out of power. They see the constant threat being checked by countries like Iran. And we know that China obviously is now being kind of distracted with an entire internal review of their military and leaks and spies and all this kind of issue. And so when you see this, I think there's people who just say, wait a second, if the United States is going to take a leadership role on the global stage, if they are going to try to govern in terms of being peace through strength, then maybe there's going to be more stability. More stability means I don't need the insurance policy as much. Again, I don't know how much of the inflows or capital flows are actually affected by that, but I do think that that is part of the narrative.
Pompliano starts by breaking down what is actually driving the metals boom, because understanding that is the key to understanding Bitcoin's struggle. Gold is rising because central banks around the world are buying it in massive quantities. They are moving away from US dollars and treasuries, not into other currencies, but into gold. This is what Pompliano calls the defiatization of the global economy. Countries do not trust fiat currencies anymore, so they are stacking gold as their reserve asset. Silver tells a different story. Yes, some people buy it as a store of value, but the bigger driver is industrial demand. Silver is needed for defense equipment, AI hardware, electric vehicles, and renewable energy infrastructure. The world is rebuilding and reindustrializing, and that requires raw materials. Silver is critical to that. Copper and platinum follow the same logic. Copper demand is exploding because of electric vehicles, electrical grids, and renewable energy projects. Platinum has very low supply, and with rising demand, the price has shot up nearly 200%. All of this is driven by real-world use cases, not speculation. Pompliano points out something important here. There has been a rotation through the metals. Gold ran first, then silver, then copper, and then platinum. This metals mania is not going away because the underlying demand is not. Let's watch more clips from Pompliano's session.
The second thing that I think is happening is Bitcoin really started to become an inflation hedge. Obviously, if you go back in 2020, when the government decided they were going to print trillions of dollars, not only were all the Bitcoiners yelling and screaming on the internet about inflation, but you also saw people like Paul Tudor Jones and Stanley Druckenmiller. They came out and they said, I believe inflation is coming. I'm buying Bitcoin and gold and other store of value assets. And I believe that Bitcoin is going to be the fastest horse. Well, now what's interesting to me is that whatever the government reports doesn't really matter because their data is horrible. 40% of CPI inputs are estimates. The government's got no clue what inflation is. I prefer Trueflation. It's a real-time alternative metric. It takes over 14 million daily price points from 40 different independent providers, and they go ahead and they calculate what they think inflation is. Right now, they are showing 1.2%. And that 1.2% is 150 basis points lower than it was just 90 days ago. And so there has been a cratering of inflation in the economy. A huge reason for that is I think that there's a big deflationary force coming from artificial intelligence. I also think things like deregulation, the tax cuts, and various other policies are having an impact. And then obviously tariffs are deflationary. And I've been saying this for a year now. And so whenever you have deflationary forces like tariffs and like artificial intelligence, I think that that negative impact on inflation, which is really positive because that means that prices aren't going up as fast anymore, that all of a sudden means that if people don't believe inflation is going to be 4, 5, 6%, they may not need the inflation hedge as much. Now, again, if you go back, gold has been going up, but I think that the driver is because of central banks buying it, not necessarily because a bunch of people think inflation is coming and they're buying gold. And so if that was Bitcoin's big hat to hang on was, hey, this is going to be the inflation hedge, and that's what drove Bitcoin from sub $10,000 to over $100,000 over the last 4 or 5 years, then the question becomes, if we get a deflationary period or disinflationary period, people are less worried about inflation, then that is obviously going to deter some of the capital that is coming into Bitcoin. And I think that you're seeing that in the price performance. Now, the last thing that I think is happening here is I believe that artificial intelligence is the shiny new tool. And so if you go and you look at young people, how many young people are talking about Bitcoin versus talking about Claude Code or talking about Claude Bot or talking about Claude Cowork or talking about ChatGPT or talking about Perplexity or going and trying to use some of these tools at their job? I just believe that a huge piece of capital flows in financial markets is all about how do I make money? And right now, a lot of people are not looking at Bitcoin. That's why sentiment is so bad. And so when you kind of zoom out here for a second, we obviously have the metals. The metals have done incredibly well. We've got gold, copper, silver, and platinum. They are all skyrocketing between 40 and 250% over the last year. Bitcoin is down 16% at the exact same time. And the reason why So I think that people are understanding, okay, there's a little bit more stability in the world. There's a little bit less inflation that likely is to come. And on top of that, artificial intelligence is the shiny new tool. And then last but not least, I also think that there's a very real entire situation where people are basically looking at the market and they're saying to themselves, well, if I can't make money at it and get rich quick, then maybe I'm going to go put my money somewhere else. Don't forget, things like prediction markets have come into the world and you see lots of capital being diverted there. You see lots of sports betting, capital being diverted there. There is simply more competition. There's Bitcoin, there's AI, and there's many, many other companies. But there's also things like prediction markets and sports gambling. When you add all of that up, it's all competing against each other. And you may say, oh, there's no way somebody is trying to actually make a decision between buying Bitcoin, investing in NVIDIA, or going and gambling on sports. But I actually think that a lot of young people, that is how they think about it. They simply are trying to drive a return. And what you consider the difference between investing and gambling, they don't see it that way. They simply see it all as risk taking. And so when you have high degrees of competition, when you have high degrees of risk taking, it doesn't matter whether they're buying Bitcoin, an AI company, sports gambling, or a prediction market. To them, they are wagering capital, they are calculating probabilities of getting a return, and then they are living and dying with their decisions. In one way, it's more of a free market. It's much more meritocracy. But also, on the other hand, it's kind of weird. Do we really want our society addicted to gambling? Do we really want our society going and trying to bet in a prediction market on the color of someone's tie or how long a press conference is? Whether you like it or not, that's the world that we live in, though. And people are going to take their capital and they're going to vote with those dollars. They're going to put it in the place where they think it will be taken care of best. And whether they're thinking long-term or short-term, ultimately they are trying to drive a return. And I think that is why Bitcoin continues to lag behind. Now, the good news is that assets that tend to lag behind at some point usually catch up. I don't think that the Bitcoin narrative has changed over the long run. In fact, I think that Bitcoin may be even more interesting sitting at $87,000 than it was at $126,000. If you love Bitcoin at 125K, you should love it at 87. But that's not how humans usually think. They tend to look at assets and say, well, this one's going up, so let me go buy it. And then when assets are going down, they usually are like, well, I don't like that. It's not working. But as we know, maybe the great Charlie Munger quote, the big money's not made in the buying and the selling. It's made in the waiting. And I think that's what Bitcoiners are realizing, is that if you continue to dollar cost average into Bitcoin or any great asset, you hold it for a long time and just let the asset do what it was intended to do. It usually will turn out just fine. And if you don't believe me, ask the gold bugs. They sat on gold for a decade and people kept making fun of them, saying it's not working. I had plenty of fun, just ribbing a little bit Peter Schiff and many other gold bugs. But congratulations to these guys. They had a thesis, they waited, and they were right. And today gold now trades over $5,000 per ounce. And if you go back and you listen to their interviews a decade ago, that's what they were predicting. They thought it was going to happen much faster, but eventually it did happen. And so I think that Bitcoiners are very similar. If you have patience, it'll be just fine. But if you actually get impatient, if you get short-term oriented and you want to only hold Bitcoin, if it's going to go up 100% every single year, you're going to be disappointed. You're going to get shaken out. And just like the gold bugs are celebrating today, you won't be invited to the Bitcoin party when it finally starts to do the exact thing that it was created to do.
So why is Bitcoin not following this rally? Pompliano identifies several forces working against it right now, and they are all connected. First, Wall Street adopted Bitcoin, and that changed everything. The people who had held Bitcoin for over a decade, the ones who loved it because it stood outside the system, started selling when institutions moved in. Bitcoin was supposed to resist Wall Street, not become part of it. Figures like Peter Thiel have openly said Bitcoin's future may not be as asymmetric as its past. That shift in belief matters because it drives behavior. Wall Street also brought new financial instruments. Shorting Bitcoin used to be difficult. Now it is easy. Options, derivatives, and structured products have flooded the market. This does not mean everything is negative, but it does mean the market structure has changed. Bitcoin used to be an 80 volatility asset. Now it is closer to 40. That means smaller swings both up and down. The days of massive parabolic moves might be over, but so are the 80% to 90% crashes. Second, Bitcoin once thrived as a chaos hedge. Wars and instability from Iran and China pushed people toward it as insurance. Now the world feels stable. U.S. strength is back. When stability returns, insurance demand falls. That weakens Bitcoin's story. Third, inflation is dropping. Pompliano ignores government CPI, using true inflation instead, tracking 14 million daily prices. This kills the inflation hedge narrative that drove Bitcoin from under $10,000 to over $100,000. No inflation fear means no Bitcoin need. Finally, AI is the shiny new tool. Young people discuss ChatGPT, Claude, Perplexity, not Bitcoin. Capital flows into Nvidia and Meta. Attention is finite. AI wins. Bitcoin also fights prediction markets and sports betting for capital. Pompliano ends with a reminder. Assets that lag behind usually catch up eventually. Gold bugs waited a decade and were mocked the entire time. Today, gold is over $5,000 per ounce, exactly where they said it would be. Bitcoin may be in a similar waiting period. If you loved Bitcoin at $125,000, you should love it at $87,000. But patience is required. The big money is made in the waiting, not the buying and selling. Bitcoin's long-term story has not changed, but the short-term forces working against it are real, and they are not going away soon. So the question becomes, are you willing to hold through the pain while everyone else chases the shiny new thing, or will you be another person who sells at the bottom? Please leave your thoughts in the comments below. Thanks for watching. Don't forget to like and subscribe.